Hi everyone, today we'll be going over the price forecast tools chart for Bitcoin and how you can use this tool to help improve your Bitcoin investing and analysis. This chart, as well as many others, are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it's released. So what is the price forecasts tool chart? Well, as you can probably tell, it is trying to forecast the Bitcoin price by calling its tops and bottoms far in advance. And I think the best way to really go over this chart is to just take off each line and go over them one by one, as the actual logic and calculations behind how we get these lines is actually fairly complex. So to begin with, we just look at this red line, the CVDD, which actually stands for Cumulative Value Coin Days Destroyed, which is a little bit of a mouthful, I'm aware. But what it is trying to do is calculate the amount of Bitcoin that is leaving older wallets. So to really understand this metric, we need to know how coin days are actually calculated. So coin days, for example, if I was holding one Bitcoin, if I had just bought one Bitcoin and held it for 7 days, I would have accrued 7 Bitcoin days. Now, if I was to sell that on the 7th day, I would have created 7 Bitcoin days destroyed. And this is an interesting metric because it gives more weight to the holders that have been holding onto their Bitcoin for an extended period of time. If lots of people are selling their Bitcoin who have been holding for an incredibly long period of time, we're going to see the coin days destroyed value increase, especially if we denominate that value in USD, which is what the cumulative value coin days destroyed metric is doing. So we're taking all of the coin days destroyed values at the USD price at which they were transferred. So if I was to transfer my Bitcoin that I'd held for 7 days at a price of $10,000, then I would have accrued $10,000 towards the cumulative value coin days destroyed metric. And what we can do is aggregate all of the Bitcoin transactions on the network and the price at which they were moved at, times by the length of time that had actually been held in a wallet. And once we have that value, we're multiplying it by a value of 6 million. Now, this 6 million value is a somewhat arbitrary number as it's not really linked to any other Bitcoin data. But as you can immediately see on the chart, once we multiply this value by 6 million, we have a very effective tool for calling market bottoms. Throughout almost all of Bitcoin's price history, we have seen the market cycle end when Bitcoin has touched this CVDD line. And in many circumstances, such as when we bottomed out in 2015 here, you could actually see that this CVDD value had actually almost called the bottom months in advance. As it hovered around $200 for over a year, we can see that this was clearly a very strong area of support and an area where lots of strategic investors took advantage of this and accumulated Bitcoin at these prices. And the same was true with the 2018-2019 bear cycle. Once price reached this CVDD line, this really indicated the market had bottomed out and was a great area for strategic investors to pick up some Bitcoin to be provided outsized returns in the upcoming cycle. So next, I'll remove the CVDD and I'll add the top cap value. And again, it's pretty obvious that this has been a very effective tool historically at calling price peaks in Bitcoin. Now, the top cap is a fairly simple calculation in comparison. What it is doing is it's taking the cumulative sum of the market cap and dividing that by the age of the market in days. And again, this may sound quite complicated, but if we know that Bitcoin has been around for around 12 years as an investable asset class, we can multiply the amount of years it's been around by the days in a year. And every single day we can calculate what the market cap was. And once we accumulate that market cap and divide it by the age of the market in days, we then get a value that we are multiplying by a value of 35. Now, again, this is a somewhat arbitrary number, but once we multiply this value, this average cap, which it is called, by a value of 35, we get this top cap metric. And as we can see, historically, this has been great for calling market tops, except for in the most recent cycle where Bitcoin didn't actually reach this top cap target, which was just above $100,000 as Bitcoin's price began to peak for the first time. Right now, the top cap value sits at just beneath $250,000. And I'm sure everyone would love to see Bitcoin's price reach or even surpass that, but we'll have to wait and see if that's a possibility. Next up, I'm going to remove the top cap and add the delta top, which is a somewhat similar looking line, but we can see there's areas where it's potentially more accurate and potentially less accurate. So we'll just go over how the delta top is calculated. So the delta top is using a similar calculation which we used for the top cap. So we are taking the cumulative sum of the market cap and dividing that by the age of the market in days. We call this value the average cap, and we then subtract the average cap from the realized cap. Quickly going over the realized cap, if you're unaware, we have made a video on it, so I would suggest going back and watching our realized price video. But the realized cap is the average transactional value of each Bitcoin on the network at the time it was moved. So every time Bitcoin is sent on the blockchain, we can actually see at which price it was moved at and multiply that by the circulating supply of Bitcoin to get this realized cap, which is almost Bitcoin's fair value and its utilization of the network value. So we subtract the average cap from the realized cap and multiply that value by 7 to get this delta top value. And again, the logic behind this calculation is somewhat complicated, but it is fairly obvious what it is showing us, and it is fairly accurate in what it is trying to tell us. Throughout all of Bitcoin's price history, we have seen price either reaching or coming very close to touching this delta top value. Next, remove the delta top and we'll add the balanced price, which, similar to the CVDD, is trying to predict where markets may bottom. So the balanced cap is taking into account two values, and that is the transferred price. And the transferred price, again, is a somewhat complex metric. What it is doing is taking the sum of the coin days destroyed. We discussed this previously. It is the amount of days in which a Bitcoin hasn't moved before it is moved on the network. So what we can do is collate all of these coin days destroyed value and divide that value by the circulating supply of Bitcoin at that time. So this transferred price is really weighting the transfer of Bitcoins substantially towards those that have been holding it for a longer period of time. That's why we see these periods where the balance cap is increasing substantially as we see these longer term players begin taking profit, yet the balance cap begin to flatten out when Bitcoin's prices drop substantially and it doesn't seem worth taking profit for a lot of long-term investors. The realized cap we discussed before is the average network utilization value of the Bitcoin network, the last price at which each Bitcoin was last moved at, multiplied by the circulating supply. So subtracting this transferred price from this realized cap gives us this balance price, which again has historically been a fantastic place to accumulate Bitcoin if and when it reaches or even surpasses beneath this line. Currently, this balance price sits somewhat at a similar price to the CVDD at around $16,500 to $17,000. We actually came very close to closing beneath this. You have to also bear in mind that looking to Bitcoin is only taking into account the closing values, the daily closes of Bitcoin. So in terms of actual lows and highs of price, this isn't taken into account on the Look Into Bitcoin site. So I can say on this day here where Bitcoin closed at $19,000, we did actually have a low across most exchanges which wicked beneath this line. So we did temporarily dip beneath this balance price, and maybe that did indicate the bottom. Maybe we're not going to get any closes at or beneath this line as strategic investors tried to pick up as much as they could beneath this value. And lastly, we're going to look at terminal price. So the terminal price is actually using a value we've already calculated in the balanced price, and that is the transferred price. So it's using the coin days destroyed, which is the aggregate amount of days before a Bitcoin was sent across the network multiplied by the circulating supply. That gives us the transferred price, and the terminal price is multiplying that by a value of 21. As there can only ever be a supply of 21 million Bitcoin, there is some logic behind this multiplication to come to this terminal price. And this may actually be one of the most, if not most effective, top calling for price metrics there is available. As we can see, in every single one of Bitcoin's market cycles, price has either touched or just slightly surpassed this terminal price. So it is an invaluable tool for a lot of smart money and strategic investors. If we just look at the most recent cycle here, we can see, if we zoom in even further, we only had a handful of days where price surpassed this terminal price line, and this would have been a very optimal area for profit taking. So now we've gone over each of them individually, we can add them all back together. You understand the calculations and the logic behind all of them. And we can see the top three lines we have here, the terminal price, the delta top, and the top cap in unison all provide great strategic investors profit-taking targets. And same for the downside, looking at the CVDD, the cumulative value days destroyed, and the balance price, we can also see great areas for accumulating Bitcoin as price bottoms out. So just to summarize, the price forecast tools provide multiple on-chain metrics to predict future tops and bottoms in the Bitcoin price. Historically, these tools have accurately outlined both major highs and major lows in price months or even years in advance. We can also see that focusing on macro analysis and data point tools such as these not only make life easier for Bitcoin investing and analysis, but are often far more effective than trying to focus on the shorter term volatility within crypto. If you like this video, then please visit lookintobitcoin.com. We're well aware that this is probably one of the most complex charts we have on our site with lots of maths and formulas involved. So if you need a little bit more insight into all of the maths and logic behind this chart, then please visit this here, and we can see in the description beneath, we have even more information regarding each one of these metrics. What we're trying to do is provide Bitcoin charts for free and alerts at an affordable price that can cost several thousands of dollars per year on other platforms. And in some cases, the charts we show you are simply not available anywhere else. Please don't forget to like the video and subscribe to the channel to learn about all our other charts and gain even more market insights. Thank you very much for watching, and I'll see you in the next one.